Imagine stepping into a vast warehouse where silence clings to the stone floor like frost. Dust swirls in thin shafts of light that cut down from broken windows high above. You are small, fragile, yet restless, scurrying like a mouse across the cold ground, chasing glimmers of golden grain piled in the corners. Each kernel sparkles as if it carries the weight of every dream you've ever had, every profit you've ever longed to touch. You dart forward with confidence, convinced you know the path no one else can see, the shortcut that will bring you treasure before others arrive. Yet as you stretch toward the glitter, a shadow moves across your path. Slow, deliberate, silent. The cat is here. Its eyes glimmer like twin blades, unblinking, unhurried, and deadly. Its muscles coil beneath the fur, claws sliding out, the sound echoing louder than any heartbeat. In that frozen moment, every ounce of bravado melts away, replaced by the terrible truth. You are being watched, measured, and judged. The game has already begun. This is trading. Not a gentle puzzle, not a hobby, but a relentless game of predator and prey where every move is tracked by sharper eyes than yours. Wall Street is the warehouse, only bigger, colder, louder, filled with shadows that never sleep. And at the center of that storm once stood Steve Cohen, the man whispered about as the king of hedge funds. His reputation was a living legend, the story of a trader who could bend numbers, patterns, and moments of panic into rivers of profit. Cohen didn't just play the market, he reshaped it, turning millions into billions with trades executed so quickly and so precisely that outsiders could only watch in disbelief. Year after year, his hedge fund, SAC Capital, crushed the competition with results other traders could hardly imagine, let alone replicate. But just as a mouse's daring sprints draw the attention of the cat, so too did Cohen's dazzling performance draw scrutiny. Success this extraordinary does not go unnoticed, and neither does it go untested. But this isn't just Steve Cohen's story, it's yours as well. Every time you chase a hot tip, every time you leap into a trade without a plan, you become the mouse darting blindly into the open floor. The market is the cat, the regulators are the cat. Even your own fear and greed are cats waiting in the dark. One wrong step, one moment of overconfidence, and you're caught. Yet there is a way to survive. There are rules, 10 of them, that can turn you from prey into a survivor, the kind of trader who slips past danger and makes it back to safety with treasure still in hand. Welcome to Trading Psychology's Stick, the channel where we break down the mental game that separates survivors from statistics. Quick disclaimer, nothing you hear is financial advice. These are lessons born from scars, stories of real losses and recoveries, strategies meant to keep you alive for tomorrow's chase. In this video, I'll take you through 10 survival strategies, each carved from real stories that shook Wall Street. These aren't fairy tales or motivational slogans. They are scars stitched into the memory of the market itself. You'll hear of empires built on whispers, of midnight panics that ended in shattered hard drives, of billion-dollar bets that collapsed in flames. Each story will leave behind a lesson, a shard of wisdom that traders like you can carry into tomorrow's fight. Some tales will exhilarate you, others will unsettle you, but together they'll paint the raw truth. Trading is not just about numbers on a screen, it's about survival in a world where the hunters never sleep. So buckle in, because what comes next may shake the way you see every trade you've ever taken. But before we dive into strategies, we need to face a question that most traders never answer honestly. What exactly is an edge? Traders love to throw the word around, flaunting it like a badge of honor. I've got an edge, this is my edge, as if saying it makes it real. Yet, beneath the bravado, the coffee-fueled confidence, and the screenshots of quick profits, very few can actually define it. Strip everything away, and the word becomes fragile, almost hollow. So let's pause. Ask yourself now, without excuses or stories, what does edge really mean to you? Is it a feeling, a guess, or something you can prove? Because this single question is the foundation of everything else, and if you cannot answer it with clarity, then every trade you make rests on an illusion. Imagine again the mouse racing across the warehouse floor. To it, every grain of wheat looks like a prize, but not all are safe. Some kernels are traps, some are poisoned, and others are left in the open where the cat crouches unseen. The mouse survives only by sensing something the rest of the colony cannot. Some subtle difference, a sliver of insight that separates survival from disaster. That is edge. Steve Cohen built his empire on this principle. In the 1990s, when hedge funds were quiet tools for the wealthy, he sharpened them into weapons, turning his fund into the most feared name on Wall Street. While others stumbled, Cohen returned 30, 40, sometimes even 60% year after year. To outsiders, it looked like magic. To insiders, it looked like a mouse who always knew exactly where the cat wasn't watching. But here's the uncomfortable truth. Edge doesn't come from luck or gut feelings. It comes from information, from structure, from systems that others lack or fear to use. Picture Cohen's traders as dozens of tiny pods scattered across the warehouse, each one sniffing at the floor, scraping together scraps of information. A doctor whispers about a drug trial, a broker hints at an upgrade, a consultant slides details about quarterly sales across a table. Each fragment is carried back to the center, where Cohen himself decides which crumbs can be turned into a feast. That was his edge, a web so wide it caught rumors before they ever reached the headlines. But here's the question you can't avoid. Was this skill, or was it simply stepping too close to the cat's claws? The FBI thought the latter, and when the cat prowls close, even the fastest mouse begins to tremble. Now, turn that mirror on yourself. Have you ever convinced yourself you had an edge because you spotted a forum post before others, or because your gut screamed, buy, when a green candle flashed? If you can't write your edge down in one clear sentence, then it's not an edge. It's fantasy, and fantasies are how mice end up in traps. But knowing you have an edge is only half the battle. The other half is proving it with cold, hard numbers. Because belief alone never saves the mouse when the cat pounces. Only proof does. In trading, that proof is expectancy, the stopwatch in this endless chase of predator and prey. Expectancy strips away stories and excuses, forcing you to see if your advantage is real or imagined. It is the average amount you can expect to win or lose per trade, nothing more, nothing less. The formula is simple, but its truth is merciless. Win rate multiplied by average win minus loss rate multiplied by average loss. If the result is positive, you have a fighting chance to survive. If negative, every step you take drags you closer to the claws. Cohen's empire understood this deeply. In its first 7 years, SAC Capital had only 3 losing months, the worst a mere 2% decline. While others stumbled through chaos, Cohen's stopwatch ticked with perfect rhythm, reminding him not only that he was fast, but that he could prove it. Picture a trader who wins 60% of the time, but each loss is twice as large as every win. On paper, he looks confident, but expectancy exposes him as doomed. Another trader wins only 40% of the time, yet every winner is 3 times bigger than each loser. Expectancy whispers the truth. This mouse will live another day. Numbers never lie. Traders do. Close your eyes and recall your last 20 trades. Do you remember why you entered each one? Do you know your average win, your average loss? Can you say with certainty whether your expectancy is positive or negative? Pause right here and calculate it. Don't just trust your gut. Don't just hope. Because if you cannot answer this question, then you are not trading. You are gambling in the dark. And in that darkness, the cat sees you more clearly than you see yourself. Risk metrics are not luxuries. They are survival gear. Profit factor tells you how sharp your claws really are, comparing total wins to total losses. The Sharpie ratio shows whether your path is smooth or jagged, weighing return against volatility. Maximum drawdown reveals the depth of the pit you'll fall into when luck inevitably turns against you. These are not academic exercises. They are the wires of the trap, invisible until they snap shut around you. Ignore them, and the cat's purr will echo closer than you expect. Here's your challenge. Take your last 100 trades and calculate expectancy, profit factor, Sharpe ratio, and maximum drawdown. Face the truth without excuses. If the number is negative, you are running in circles and the cat will eventually catch you. If positive, then protect it like treasure, refine it, nurture it, because edge is fragile and one careless night in the warehouse can undo years of survival. The mouse that survives longest never relies on a single tunnel. One path is a death sentence, because if the cat waits at the only exit, the game ends. Survival demands multiple routes, hidden doors, and escape hatches, each one independent of the other. In trading, this is the essence of the pod system, a structure where no single failure can destroy the whole. Steve Cohen perfected this model inside SAC Capital. Instead of one massive team moving in lockstep, he built dozens of pods, small groups operating semi-independently, each chasing opportunities in their own corner of the warehouse. One pod whispers about a tech stock, another maps healthcare data, a third tracks macro flows. Each burrow buzzes with energy, but the genius was in the center. Cohen himself, listening, filtering, and deciding which tunnel led to safety and which to seal off. This diversification of risk and information gave him resilience. If one pod collapsed, the colony lived on. Now let's make this real for you. You may not run $1 billion fund, but you can still think in pods. Separate your roles: researcher, trader, and risk manager. As a retail trader, all three may live in the same mind, but their voices must remain distinct. When you research, you are the curious mouse sniffing for crumbs. When you execute, you are the hunter making swift decisions. When you manage risk, you are the guardian whispering no when greed pushes too far. If these roles blur, the cat will strike before you even notice. Here's your assignment. Create 3 separate documents tonight. One for research notes, one for trade execution rules, one for risk management limits. Never let them mix. This separation is more than paperwork, it's armor. It prevents bias from spreading, stops hope from leaking into execution, and keeps fear from poisoning research. Pods aren't just structure, they are survival. A mouse survives not only by running fast, but by listening carefully to every rustle in the warehouse. Traders are no different. Markets hum with endless noise, headlines flashing across analyst notes, earnings calls, FDA approvals. But here's the paradox: the sound itself doesn't matter. What matters is how you translate noise into probability. In the early 2000s, Raj Rajaratnam took a phone call. Jeff is going to upgrade Amazon in 6 minutes. 30 seconds later, after buying 100,000 shares, he made $500,000. To outsiders, it looked like sorcery. To traders, it was a vivid lesson. The difference between noise and signal is measured in time. Rajaratnam had minutes of advantage, but the FBI was already listening. The cat pounced, and his edge became his downfall. Now picture yourself. A headline flashes, "Company beats earnings." Your pulse surges, your hand twitches, ready to act. Stop. The sound is meaningless until you compare it with expectations. Cohen's traders thrived by preparing, trading 3 patterns: pre-positioning, scalping the chaos, and fading the overreaction. Here's an exercise that could change how you trade forever. Before you act on any piece of news, stop and ask yourself 3 questions. 1. What was the market expecting? 2. How different is reality from that expectation? 3. How can I structure a trade that pays if my probability map is correct? Write the answers down before you risk a cent. Because raw headlines are worthless unless you filter them through probability. The mouse that bolts at every sound will exhaust itself, but the one that hears a pattern in the cat's steps knows which way to sprint. Event trading is not about bravery, it's about choreography. If this, then that. Reflexes rehearsed in advance, executed without hesitation. But beware, not all information is created equal. Some whispers are poisoned cheese, glittering too perfectly to be true. And if you cannot tell the difference between clean data and forbidden whispers, survival will be short-lived. In every warehouse, the cheese glitters. Some lies scattered by chance, some placed with intention, shining so perfectly that no mouse can resist. But the mouse that lunges without caution soon feels the steel snap of the trap. On Wall Street, that cheese was insider whispers. For years, traders called it edge. For years, it paid, until the cats arrived with wiretaps and subpoenas. SAC Capital became infamous for paying huge commissions for a first call, a whisper about upgrades or trial results or ugly quarters. These scraps fattened accounts until the FBI came knocking. In 2011, Steve Cohen himself sat for deposition. Asked about Rule 10b5-1, the cornerstone of insider trading law, he stunned the world by shrugging and saying, "Gang, you would have to explain it to me." Some called it insulation, others arrogance. Then came Matthew Martoma. He bet billions on an Alzheimer's drug, long and strong, until a doctor whispered the results would be catastrophic. Martoma flipped the book, shorted hard, and SAC pocketed $275 million. But soon Martoma was convicted, compliance was exposed as a farce, and SAC's empire bore a scar that never healed. But there is another way forward, one that doesn't require whispers or traps. In today's markets, the richest edges aren't hidden behind locked doors, they're scattered in plain sight. Alt data is the clean cheese, free for any mouse disciplined enough to use it. Google search trends hint at consumer demand before earnings. Reddit sentiment scrapers reveal the mood of retail traders before the herd moves. On-chain data shows flows of liquidity in crypto markets long before headlines catch up. These signals cost nothing but curiosity and time, and no FBI will ever knock on your door for studying them. Here's your challenge. Tonight, pick one and master it. Tomorrow, add another. Build your edge on data no one needs to whisper. And to guard yourself, create a one-page compliance manual with 3 rules. 1. Never trade on material non-public information. 2. Log your sources. 3. Prove every trade rests on public data. In the warehouse, a lone mouse sprinting across the open floor is easy prey. But a dozen mice scattering in every direction overwhelm the cat, some lost but most surviving. Trading works the same way. Risk parity is the art of balance, spreading your bets so no single claw swipe can end the game. Many traders confuse conviction with size. I feel it, therefore I go all in. But feelings don't save you when the claws strike. Math does. Kelly's criterion gives the formula. Edge divided by odds tells you the maximum percentage of capital you should risk. Yet even this is dangerous. The pros use fractional Kelly, often a quarter of the number, trading survival over speed. Cohen's pods lived this truth, independent silos spreading risk across sectors, so one collapse didn't poison the fund. Here's your mirror. How often have you over-leveraged because you knew the move was coming? Every scar you carry from those bets is proof. The deadliest trap in the warehouse isn't always set by others, it's the one your own mind creates. FOMO, the fear of missing out, glows brighter than any bait the cat could ever place. Picture a retail trader at his desk. Charts flash green, Bitcoin rockets upward, a biotech stock doubles, social media swirls with stories of overnight millionaires. His pulse hammers, his hand twitches, and though he knows the risk, he lunges anyway, buying the top. Hours later, the market reverses, clawing back his capital with merciless precision. The cheese he thought was salvation was just bait, even taken weren't immune. Analysts convinced the run had to continue, sized up recklessly, abandoning the playbook. One swipe and their edge was gone. Here's your moment of truth. Think of your worst FOMO trade, the one that still stings. Write it down. Now write these 4 steps. Define entry rules, set maximum size, wait for confirmation, and log every impulse resisted. Discipline, not desire, is the cure. In the dead of night, when the warehouse falls silent, a mouse pauses mid-run. Its whiskers twitch, its breath quickens, and it waits instead of sprinting blindly. That pause is survival. Traders must learn the same skill, the art of interrupting destructive patterns before they spiral. The market lures you into rhythm, buy, sell, win, lose, repeat, until one day you realize you're no longer trading, just reacting like prey. Consider Turney Duff, a hedge fund trader who drowned in the intoxicating rhythm of information, whispers bleeding into trades, nights blending into mornings. He couldn't stop, couldn't break the loop, and eventually the FBI's wiretaps ended the game. Now look at yourself. After 3 straight losses, your instinct screams for one more to make it back. That is the loop tightening. Here's your toolkit. When compulsion rises, stand up, walk away, ask aloud, if this were my first trade of the day, would I take it? That breath could save your account. There are nights in the warehouse when silence itself becomes terror. The mouse freezes, whiskers trembling, because quiet means the cat is close. Panic takes over, and in desperation, some destroy their own tunnels as if erasing their tracks could save them. In November 2010, Donald Long, once a rising star at SAC Capital, felt that terror. The Wall Street Journal had just revealed a massive insider trading probe, naming SAC. Long panicked. That night, he smashed his computer hard drives with a hammer, scattering shards into garbage bags and wandering the city streets, tossing fragments into random dumpsters. But cats aren't fooled so easily. The FBI already had tapes of his whispered trades. Both he and Noah Freeman pled guilty. SAC's empire was scarred deeper still. By 2013, the government fined the fund $1.8 billion and forced it to shut down. Cohen himself survived, never charged, but the culture of whispers was exposed. Here's the lesson. Fear can make a trader destroy himself faster than any market or regulator. The cat doesn't always need to strike, it only needs to scare you into doing the damage yourself. But survival isn't about eliminating fear, it's about building systems that still function when fear takes over. The strongest mouse doesn't rely on instinct alone. It relies on tunnels dug in advance. Traders must do the same. Panic will come. Losses will sting. Regulators will circle. What saves you isn't bravado, but structure. The habits and reviews that keep you moving even when your hands shake. That's why the nightly review matters. Each evening, you step back, document, and reflect. You trace the moves, the mistakes, the near misses, and the lessons. That ritual turns panic into process, fear into data, and scars into maps for tomorrow's survival. The mouse that lives longest isn't the fastest. It's the one that builds a network of tunnels so complete that no matter where the cat pounces, an exit is near. For traders, this is the survival system, a pipeline that turns ideas into proven edge. At SAC Capital, ideas weren't thrown blindly into the market. They were gathered, filtered, tested small, then scaled if proven. That process was oxygen, not luxury. You need the same. Step 1, capture the idea, write it down before it drifts away. Step 2, backtest it. Hundreds of trades, years of data. Step 3, paper trade. Run it in shadow until it earns rhythm. Step 4, trade it tiny, pennies at risk to test execution. Step 5, scale only if expectancy proves positive. Which step do you skip? Be honest. Because without a pipeline, even a good idea can kill you. The cat doesn't just punish bad trades, it punishes recklessness. When the market closes, survival doesn't come from escaping into distraction. It comes from the ritual. The mouse that lasts returns to its burrow, retracing the paths it ran, the near misses, the traps avoided. Traders must do the same. Each night, you pause and write. 5 questions guide you. What was my best trade today and why? What was my worst trade and what triggered it? Did I follow my rules or break them? What pattern did the market show that I missed? What will I do differently tomorrow? Answer them while the memory is fresh, not when the pain has faded. Journal with brutal honesty, entry reason, exit reason, risk size, emotion, rules kept or broken. These notes transform chaos into pattern, pattern into growth. They turn scars into maps, mistakes into stepping stones. The ritual is not optional, it is the oxygen that keeps your edge alive. The cat will never change. It will always be faster, stronger, patient. But you can change. Each night you survive adds a new mark to your map of the warehouse. Every mistake becomes a line, every scar a signal, every close call a path etched into memory. Over time, what once felt like chaos turns into a pattern only you can read. Survival isn't about beating the cat once or twice. It's about learning faster, adapting deeper, and building a life where the chase itself becomes your training ground. The warehouse doesn't get easier, but you get sharper. And with every repetition, you move from fear to familiarity, from desperation to discipline. That is how the mouse survives, not through luck, but through growth carved in repetition. You've followed the mouse through every tunnel, every brush with the cat's claws, and now 10 lessons stand carved in memory. 1. Edge is not a feeling, it is measurable. 2. Expectancy is your stopwatch, proof that survival is more than hope. 3. Build pods, separate your roles, never let bias leak across them. 4. Turn noise into probability, not panic. 5. Chase clean data, not poisoned whispers. 6. Size your risk with discipline, not desire. 7. Resist FOMO with structure, not impulse. 8. Interrupt destructive loops before they consume you. 9. Panic destroys faster than any market. Face it with systems, not hammers. 10. Survival requires a pipeline and nightly ritual to turn scars into wisdom. These are your codes, not stories. They are the difference between prey and survivor, between running blind and building a map of the warehouse that keeps you alive. Now it's your turn. Out of these 10 lessons, which one struck deepest? Which one made you stop and whisper, "That's me, that's my weakness"? Write it down and share it. Not for me, but for yourself and for the colony of traders walking these tunnels with you. Every comment becomes a lantern, a signpost in the dark, guiding another mouse who might otherwise be lost. Your scar might be someone else's salvation. This isn't just a channel. It's a tribe, a community of survivors mapping the warehouse together. The cat may never sleep, but neither does our chance to adapt. Together, we build tunnels that no single claw can collapse. Together, we learn to survive longer than fear. So speak up, because your story matters more than you realize. Now it's your turn. Out of these 10 lessons, which one struck deepest? Which one made you stop and whisper, "That's me. That's my weakness"? Write it down and share it. Not for me, but for yourself. and for the colony of traders walking these tunnels with you. Every comment becomes a lantern, a signpost in the dark, guiding another mouse who might otherwise be lost. Your scar might be someone else's salvation. This isn't just a channel, it's a tribe, a community of survivors mapping the warehouse together. The cat may never sleep, but neither does our chance to adapt. Together, we build tunnels that no single claw can collapse. Together, we learn to survive longer than fear. So speak up, because your story matters more than you realize.